When Washington shuts its doors, your practice can't afford to blink. What happens when Medicare payments slow or telehealth rules vanish overnight? Welcome to Medical Money Matters. If you're like most medical group leaders, your attention is already divided between patients, staff, regulations, and operations. Add a federal government shutdown to that mix, and suddenly you're facing a silent threat to your cash flow, your staffing, and the systems you count on to deliver care. Today, we're breaking down exactly how the current government shutdown affects medical practices, and not just in the obvious ways. We'll look at how Medicare payments might be delayed, what flexibilities have quietly disappeared, and how you can proactively shield your practice from the ripple effects. Welcome to Medical Money Matters, the podcast where you can find experts, answers, and resources so that you can achieve mastery over the financial and business aspects of your practice. Hello, everyone. I'm your host, Jill Arena. I began my career in accounting and finance, and I have more than 30 years of experience running medical groups. I own and operate a national healthcare consulting and revenue cycle company, and I am the author of Physician Heal Thy Financial Self. In 2020, I co-founded the Physician Leadership Project, and in 2025, I released Physician's Edge, the first of its kind online business education for physicians. My passion is to increase financial and business literacy for physicians. Episode 152, Surviving the Shutdown, What Medical Practices Must Do When Washington Closes. When Washington shuts its doors, your practice can't afford to blink. What happens when Medicare payments slow or telehealth rules vanish overnight? Welcome to Medical Money Matters. If you're like most medical group leaders, your attention is already divided between patients, staff, regulations, and operations. Add a federal government shutdown to that mix, and suddenly you're facing a silent threat to your cash flow, your staffing, and the systems you count on to deliver care. Today, we're breaking down exactly how the current government shutdown affects medical practices, and not just in the obvious ways. We'll look at how Medicare payments might be delayed, what flexibilities have quietly disappeared, and how you can proactively shield your practice from the ripple effects. Whether you're a small independent clinic or a large multispecialty group, this episode is designed to help you think clearly and act strategically. Let's start with what a government shutdown really means and why it matters to healthcare. When Congress fails to pass either an annual appropriations bill or a continuing resolution to keep things funded, we hit a shutdown. That means the government can no longer legally spend money on, quote, non-essential discretionary programs. Mandatory programs like Medicare and Social Security technically continue, but with limited staffing and operational support. In practice, that means delays, uncertainty, and disruption. Now, you might think Medicare is mandatory. It'll keep paying, right? And in theory, yes, Medicare's payments should continue. But here's the nuance. To manage legal and logistical risk, CMS typically instructs Medicare administrative contractors, or MACs, to temporarily hold claims during a shutdown. This buffer, usually 10 business days, is designed to avoid having to reprocess payments later if Congress retroactively changes things. That's layered on top of the standard 14-day payment floor Medicare already enforces for claims. So while the impact might be subtle at first, over time, especially if the shutdown drags out, you're looking at cash flow strain, particularly for practices heavily reliant on Medicare revenue. And that's just the tip of the iceberg. Beyond direct payment delays, we're seeing the expiration of key regulatory flexibilities that were temporarily extended by funding legislation. As of this month, many COVID-era telehealth waivers have expired. That means if you're billing for telehealth services in rural or underserved areas, you might be out of compliance. Originating site rules are back. Audio-only visits might no longer be covered. And home-based telehealth, often not reimbursed unless the patient meets strict criteria. Hospital-at-home programs, another innovation born of necessity, have also lost their special waivers. Hospitals running these services must now transition patients back to traditional care settings or face noncompliance with CMS requirements. That's not just an operational headache, it's a revenue hit. Let's not forget other federal health programs whose funding was wrapped up in appropriations. Community health centers, graduate medical education for teaching health centers, and even some Medicaid hospital payments may now be in limbo. If your clinic receives supplemental funding or participates in grant-based programs tied to these, you need to start contingency planning. Now let's go deeper. What happens if Medicare payments aren't just delayed by a few days, but stall for a month or longer? What if your cash flow assumptions are off because you're still billing for services under rules that have technically expired? Here's where many practices find themselves dangerously exposed. They run lean, they don't maintain operating reserves, and they rely on consistent revenue from Medicare and Medicaid to meet payroll and cover expenses. If that flow slows or dries up, they're suddenly choosing between paying staff, paying rent, or delaying vendor payments. That's not sustainable. And here's the kicker. Most physicians and medical group leaders don't realize they're vulnerable until it's too late. Because physicians are trained to be clinicians first. When a financial shock hits, the reaction is often emotional, reactive, and too slow to be effective. So, let's shift the mindset. Let's get proactive. You're listening to Medical Money Matters, a weekly podcast brought to you by Healthy Practices, a healthcare consulting and revenue cycle company dedicated to keeping our clients independent. Please reach out if we can do anything at all to support your practice. You can find more information online at healtheps.com. That's www.healtheps.com. Please follow or subscribe to get all future episodes downloaded as soon as they're released. If your practice needs capital to survive this disruption, or just to maintain stability while the shutdown unfolds, you do have options. Start internally. What reserves do you have? Are there cash cushions you can draw from temporarily? If you have liquidity, now's the time to safeguard it. Defer non-essential capital purchases. Stretch vendor payments within reason and legal boundaries. Reprioritize spending. If your practice has a line of credit, this is the moment to activate it. Don't wait until you're out of cash. Talk to your bank now. Understand your terms. Consider drawing from it to create a cash buffer, even if you don't need it immediately. Interest on a line of credit is often a small price to pay for peace of mind and payroll stability. Don't have a credit line? Consider applying for one. SBA loans, short-term bridge loans, or working capital lines may be available to practices with stable revenue histories. But don't assume you'll get fast approval. The application process takes time, and in a shutdown, even bank-related processing tied to federal agencies may be slower than usual. What about equity? If you're a group practice, now might be the time for a capital call. Ask your partners to contribute based on their equity share. If you have younger partners who are still ramping up, consider offering internal loans or delayed repayment structures to avoid hardship. If structured right, it preserves group stability and spreads the burden proportionally. You might also look at partner loans or subordinated debt from owners. These aren't always ideal, but in times of cash crunch, they can be faster and more flexible than external options. For clinics tied to hospitals or larger systems, now is the time to open dialogue. Will they cover operating costs, advance payments, shift risk downstream? Don't wait to find out during a cash emergency. And finally, be very cautious with short-term cash flow products like factoring or revenue-based financing. They can be expensive, opaque, and difficult to unwind. Use them only if all other options are exhausted, and only with full transparency to your leadership team or board. Now that we've talked capital, let's shift gears to operational planning. Start by running a financial stress test. Ask, what happens if Medicare payments are delayed 30, 60, 90 days? What if 15% of our revenues are impacted by expired waivers or delayed payments? Where's the tipping point where you can't meet payroll or fixed expenses? Build a forecast based on different scenarios. conservative, moderate, aggressive. Or, as we like to say, the good, the bad, and the ugly. Know your numbers before you need them. Next, tighten your spending. This isn't panic, it's discipline. Pause non-essential capital projects. Delay software upgrades or marketing campaigns unless they're revenue generating. Hold off on travel or conference budgets. Review your expense approval processes. Make sure managers are aligned on what's essential and what can wait. Talk to your team. Your staff can't read your mind. If you're worried about cash flow, tell them transparently, reassuringly. Let them know you have a plan and that they're part of it. Often, staff will step up with ideas to save money or streamline processes. Silence creates fear. Communication builds trust. Accelerate your revenue cycle. If you have outstanding Medicare claims, get them submitted. Push for clean claims. Reduce rejections. If your billing team is part-time or outsourced, be in touch with them now and let them know you may need a little more from them in the upcoming weeks. You want claims submitted and tracked before hold periods become a bottleneck. Monitor your max guidance. Most will publish hold timelines, exceptions, and appeal channels during the shutdown. If claims are being held, track which ones, for how long, and when they're released. For telehealth, audit your service mix. What's still billable? What's no longer covered? Are you delivering services under old assumptions? If so, you might be accruing unreimbursed care. Use ABNs, Advanced Beneficiary Notices, if needed, and make clear to patients what is changing. Advocate. Connect with your specialty societies, MGMA chapters, and state medical associations. Share your stories. Ask them to advocate for waiver extensions, retroactive reimbursements, and clarity from CMS. The more organized the message, the better chance we have of getting action. And as you stabilize, plan for recovery. When the shutdown ends, there will be a backlog. Claims, payments, guidance. Don't assume everything will snap back instantly. Prioritize your catch-up efforts. Pay vendors. Reopen paused services. And take time to reflect. What worked? What didn't? Where were you exposed? Because this won't be the last disruption, but you can make it the last one that catches you off guard. Let me close with a few real-world illustrations. A small geriatrics practice in the Midwest, reliant on Medicare Advantage plans, saw payments slow during a prior shutdown. They didn't panic, but they also didn't plan. 2 payrolls later, they were juggling invoices and staff morale tanked. They made it through, but at a cost. A little foresight could have saved a lot of stress. Contrast that with a suburban multispecialty group that built a shutdown plan after 2019. They created a 3-tier response. Tier 1 was monitoring. Tier 2 was cost control. Tier 3 was capital activation. They rehearsed it with leadership. When this year's shutdown hit, they flipped to Tier 2 on day 3 of the shutdown. Calm, confident, in control. Which scenario would you rather lead? So here's your call to action. Run the numbers, review your options, talk to your bank, talk to your board, talk to your team. If you don't have a plan, make one. If you have a plan, stress test it. If you're not sure where to start, call us. At Healthy Practices, we help medical groups prepare for scenarios just like this. From capital access to revenue cycle audits to staff communications, we'll walk you through it. No panic, just a clear path forward. If you'd like a copy of our shutdown readiness checklist, reach out to us through our website and we'll send it to you. Because when Washington shuts down, your patients don't. Your payroll doesn't. Your responsibilities don't. And your leadership matters more than ever. Thank you for tuning in to Medical Money Matters. You've got what it takes to lead your practice through uncertainty, and you're not in this alone. So stay informed, stay steady, and stay ready. Until next time. You can find more information online at medicalmoneymatterspodcast.com, and you can sign up to be notified when enrollment opens for the Medical Money Matters e-learning program for a mini MBA physician style, which will carry CME credits and will be released in upcoming months. In that, we'll do an even deeper dive so you can understand dynamic budgeting strategies, cash flow forecasting, and other more esoteric financial concepts. We've included those links in the show notes. As I like to close out these podcasts, congratulations on taking the next step in your professional development and for making the commitment to learn about the financial and business aspects of your practice. I look forward to being on this journey with you and send you my heartfelt gratitude for all that you do for your patients all day, every day.